Well, joining us now is Jefferies' Brent Thill and Wedbush's Dan Ives with opposing ratings on the stock. Brent has an underperform and Dan has an outperform. So this is a good old-fashioned bull-bear discussion here. Dan, you're on set. I'm going to start this conversation with you. Your reaction to the commentary from Karp, who basically said to me, look, macro uncertainty, if you can deliver value in this market, people are still going to spend, companies are still going to spend, governments are still going to spend, and they're seeing that in their results.
While Wall Street analysts argue over valuation, Palantir just posted another blowout quarter, dominating AI, locking in government contracts, and outpacing expectations yet again. This isn't just another tech stock, it's the operating system of the future. Check this video out.
I mean, look at those numbers. I think you could print this press release off, frame it, and put it in the Louvre, because if you look at the numbers, you look at commercial, you look what, in terms of AI, they are leading when it comes to AI revolution. The software numbers are showing, even on the government side. And look, if you look at the bears, they hate it at 30, despise it at 50, absolutely say it's expensive at 100, 125. Look, I believe this is going to $1 trillion market cap in the next 2 to 3 years. These numbers just show. I think it's get the popcorn out. It's still in the early days of playing out.
This isn't hype. It's consistent delivery. Palantir has become one of the few companies that can show simultaneous traction in commercial AI and classified government operations. That's a moat most software companies can only dream of. $1 trillion market cap in a few years? Given the tailwinds, it's not outlandish. It's plausible.
Brent, want to get your thoughts on this, especially since you have a price target that is markedly lower than where the stock is trading right now, basically half of where it's trading right now.
And Dan's price target's lower than his bullish view.
That's true.
Look, I think when you think about the fundamentals are alive, right? They beat by 24 million. They raised the guidance by 6 times the beat. We're not arguing the fundamentals. They are fully alive. The question becomes, there's not a single software stock that we've ever covered that trades at this multiple and sustained it. Snowflake, Datadog, you go through the list. So it's largely just history and valuation lessons, which haven't worked for any of these names. And so we watched Snowflake go to 50 times revenue and then went to 8 times revenue. And so Palantir is in a different league. There's no question the fundamentals are delivering. It's just the question, what is the stock worth? And our job is to find names where we don't feel like there's downward pressure on multiples, there's upward pressure. So Microsoft, Apple, there's a handful of other names that Jefferies covers that we're recommending that we just feel are great franchises and have better durability at multiples that aren't at 65 times revenue. There's not a single tech name that's ever sustained that multiple.
They say no software company has ever sustained a multiple like this. But has any other company simultaneously built the digital nervous system for both Western governments and Fortune 500 enterprises? Palantir isn't just selling AI tools. It's architecting a new operational paradigm where real-time intelligence drives action at scale. You don't measure generational tech infrastructure with a spreadsheet. You measure it by its strategic impact. And Palantir is shaping geopolitics and enterprise transformation in real time.
Dan, I hear what Brent is saying, but in a world where NVIDIA and Tesla have done what they've done recently, does history have that much bearing if you believe, as you seem to, that Palantir is this generational opportunity?
Well, I think, but look, I mean, the value, if you go back the last few years, right? I mean, they hated it at 10, despised it at 100, and that would be the continued argument on valuation. If you look what's happened to AI revolution, $2 trillion of spend over the next 3 years. On the software side, it's their world. Everyone else paying rent. And it comes Palantir. So my view is, if you look at it just on valuation, and if you went back, you've missed every transformational tech stock the last 20 years. If you just focus on valuation, where is this in the next 2, 3, 4, 5 years? And I view what Karp's doing to Palantir is generational. But again, the haters are going to hate. I get it. Valuation, check the box. You look at these numbers, to me, I think this is just another sort of table pounder moment, for what I view as the Messi of AI, Palantir.
Investors focused on historical multiples might be missing the forest for the trees. Palantir's government-backed AI infrastructure and expanding commercial footprint could make this one of the most consequential tech bets of the decade. Isn't it ironic that the most disruptive companies always look overvalued right before they reshape an entire industry? Institutional hesitation is exactly what made early gains in Amazon, Apple, and Nvidia possible for retail. Palantir is operating in a space where demand isn't just strong, it's existential.
So, Brent, what breaks Palantir then in the amazing run that it's been having? Is it overall sentiment? And if it's an overall sentiment issue, how many other things have to break at the same time?
I think ultimately you hit a point which you've hit on the multiple. I mean, look at the numbers, and the stock's down 5% in the after hours. There's some break point where, investors, this has been fueled by retail. There's not a single institutional investor I talk to that even talks about this name.
And that's part of the problem.
It's a retail-driven story, and it's not being driven by institutions. Our investor base is institutions. And so the reason why I spend such little time is no one can make sense of the multiple. And so I spend my time on things that have multiple support. So again, I'm a huge fan of the fundamentals. I'm not going to argue, and I think Dan's had a great call. So kudos to him, and no one's going to take that away. It's just my view is I think there are just other stories that we have more confidence in with that valuation support.
If retail was wrong, why are they the ones driving the upside while institutions sit on the sidelines confused by multiples? Let's be honest, we've seen this story before. The same voices who missed Tesla at $30 and Nvidia at $100 are now hesitant on Palantir because it doesn't fit neatly into a legacy valuation box. But when a company becomes the platform layer for AI-driven decision-making, is that even measurable by traditional tools? Institutional investors often lag behind the curve when a paradigm shift is happening, and Palantir is right at the heart of that shift.
Dan, I'm going to let you respond to this.
No, I'd say Brett brings a really important point because retail has been way ahead of institutional and Palantir. And Palantir, again, they continue to hate it, and they'll continue to hate it when I believe it's up another 40, 50, 60%. Part of the problem here is that institutional, they paint it with a certain brush, they have a certain negative view, and I agree with what Brent's saying. I think institutional has been way wrong on this. Retail has been right. But I do believe institutional eventually, just given, from a weighting perspective, you can't just continue to hate what I view is going to be $1 trillion market cap.
Isn't it time to ask why institutional investors are uncomfortable with companies like Palantir? Could it be because it challenges centralized norms of valuation, risk, and control? When a company is reshaping the AI software stack at scale, it's not about fitting a mold, it's about building a new one. And retail recognized that first. The consistent government contracts, expansion into commercial, and the operational leverage of their AI platforms make it hard to deny Palantir's momentum. Institutional lag is often a sign that the real innovation is ahead of the curve, and that's exactly what we're seeing here.